Hey, what is up you guys? I hope you're having an amazing day. I am very excited for today's video because we are talking about penny stocks. And we are talking about one particular penny stock that has massive upside potential and huge growth opportunity heading into the new year. This is a very interesting company that is going to be making huge moves for 2021. And I believe it is a top penny stock to watch right now. We are going to be laying out this video into 3 parts. 1, we are going over who this company is. 2, their Q3 2020 results. And 3, why I believe this is a top penny stock to watch right now. You are not going to want to miss this, so stay tuned. Real quick, if you can give this video an early thumbs up, subscribe if you aren't already, and turn on those post notifications to be notified every time I post a new video. I would very much appreciate the support so much. And remember, I am not a financial advisor, and so on and so on. Now let's jump right into the video. So the penny stock we are talking about is Drive Shack, ticker symbol DS. Drive Shack is a golfing, leisure, and entertainment venue business. It's similar to Topgolf. I'm sure many of you know what Topgolf is or probably have been there before. But yes, Drive Shack is just like Topgolf. You can go hang out with friends, have some drinks, eat, play a few games of golf, and things like that. During the time of this video, Drive Shack stock is trading for $1.60 a share. They are up 8% today, November 24th, and they do have a market cap of $108 million, which is a micro cap stock. Drive Shack had their Q3 2020 earnings in the beginning of November, which we will do a quick recap of. So we're here looking at the third quarter highlights. Total company Q3 2020 revenue of $66 million, which was down 11% compared to Q3 2019, which they obviously did get affected because of the pandemic, with much people not really wanting to go out for leisure time. AGC's momentum continued with strong Q3 results, highlighting the tremendous demand for traditional golf. In October, they completed the sale of their Rancho San Joaquin, California golf course for $33.6 million in net cash proceeds. And this is what the CEO of Drive Shack said based on this sale of their golf course. Over the past several months, we have aggressively managed costs to strengthen our financial position and implemented measures to preserve cash and sustain our liquidity. We also delivered on a large strategic goal with closing the sale of our Rancho San Joaquin traditional golf course in October for nearly $34 million in net cash proceeds. We've taken actions to restabilize our business amid the current environment and believe we are positioned to advance the growth plans we laid out earlier this year. So their goal for 2021 is to strengthen their financials and have extreme growth. And the fourth highlight, they've restabilized their business amid the current environment, positioning them to advance growth plans and goals set forward in early 2020. And lastly, they have a relatively unlevered balance sheet, providing them with a solid financial foundation to pursue growth. And speaking of growth, we're here on this slide called Executing Our Growth Priorities in a New Environment. So since the pandemic began, Drive Shack has found new ways to operate differently and efficiently financial-wise. They've 1, aggressively managed costs and implemented measures to sustain liquidity, which they closed their sale of their $35 million AGC course, restructured AGC and DS teams, lowered field fixed labor costs by 40%, significantly reduced expenses and their spending, leveraged existing resources, enforced strong capital allocation discipline, elected not to pay preferred equity dividends, and 2, they have restabilized the business amid the current environment of COVID-19 to position themselves for growth. And by doing this, they hired a CFO to lead financing process and selectively advanced critical path deliverables for new venue openings while delaying other non-critical expenditures to preserve liquidity, creating innovative programs to drive traffic and increase revenue, launching online single-bay reservation platform, reinstating successful promotions to increase revenue, and developed Orlando reopening plan. So clearly, Drive Shack has shifted their focus in changing the way they operate for the better heading into 2021. And because of these changes they've made and the response to these current times, they plan to focus capital and resources on Puttery concept. They expect to open 7 Puttery locations, including Dallas and Charlotte, by the end of 2021. And their Puttery Dallas and Charlotte are currently underway while they're evaluating real estate pipeline for remaining locations. And lastly, Drive Shack is exploring various options for 2021 funding plan. And taking a quick look at the development update of these Puttery locations, we can see that this expands store potential by hundreds of markets due to vast availability of real estate at potential discount, shorter development timelines, less capital risk, and higher development yields. The Charlotte construction documents are near completion and they plan to begin the permitting process in late 2020, early 2021. As for the Dallas venue, shell building is complete and permitting is underway, and they plan to open both venues in 2021, as I mentioned earlier. And this is great for exposure to different markets, and this will definitely expand and accelerate their growth heading in 2021. If we look at their future venues for Drive Shack, you can see that the New Orleans one is on hold, and they have one coming in 2022 in Manhattan. As for the Puttery, aside from the Charlotte and Dallas openings, they have 5+ venues opening in that same year of 2021. Now, the financials that they plan to hit with these new locations opening for the Drive Shack and Puttery venues is for Drive Shack, a total revenue of $15 to $25 million, venue earnings before interest, taxes, etc. of $4 to $6 million, with development yields of 10 to 20%, and total earnings before interest, taxes, etc. of $20 to $30 million. As for their Puttery venues is a total revenue of $7 to $11 million, venue earnings before interest, taxes, and whatnot $2 to $3 million, development yields of 25 to 40%, and total Puttery earnings before interest, taxes, etc. of $100 to $150 million. And I do believe this company has the potential to hit these target numbers because of the fact that there's a strong demand for traditional golf. For public courses, you can see that the revenue from green and cart fees is up 15% versus Q3 2019. And for daily fee rounds, they are up 10% versus Q3 2019. And private courses, member sales are up 48% versus Q3 2019, and total rounds up 25% versus Q3 2019. So these are some huge percentage increases, as you can see. Now we're here looking at Drive Shack's Q3 results for their Gen 2.0 revenue. You can see in their West Palm location, their Q3 2020 revenue was $2 million, 95% of walk-in revenue and 5% of event revenue. Their Richmond location for Q3 was 98% walk-in, 2% event revenue of almost $2 million. And for their Raleigh location, it was 97% walk-in and 3% event revenue, which was $2 million. For their driving event revenue, Drive Shack launched 2-bay package in mid-September to encourage small event bookings in all Drive Shack locations. Since launching this package, event revenue has increased 4 times. Drive Shack's GAAP financial results of Q3 2020 was a GAAP loss of $11 million or 16 cents per share versus a GAAP loss of 20 cents per share in Q3 2019. So there was a little improvement there. And the year-to-date for 2020 GAAP loss was $70 million or $1.05 a share versus the GAAP loss of 65 cents a share in Q3 year-to-date 2019. Okay, so now we are here looking at their statement of operations. We can see for the 3 months ended, revenue for golf operations was $58 million, which is not so much of a loss compared to 2019 of September, which was $60 million. However, the sales of food and beverages did go down drastically because, again, of the pandemic and their closures of their locations for the time that many other places, were shut down. And their sales for 3 months ended of 2020 for food and beverages was $7 million compared to September 2019 of almost $14 million. Total operating costs did decrease of $72 million compared to September 2019 of $92 million. And operating loss did decrease by far to almost $6 million compared to September 2019 of $17 million. And their net loss did decrease as well compared to September 2019 to $9 million. Now we're here looking at Drive Shack's balance sheet. We can see that as of 9/30/2020, their cash and cash equivalents is at $13 million. Total current assets as of 9/30/2020 are $54 million. And total current liabilities are $106 million. So after doing the math, this gives them a current ratio of 0.51. which is kind of scary, but not so much worried because I'm looking forward with this company as they are looking forward as well into 2021. And I do believe that there are better things that are going to come out of this company financially and growth wise. But definitely something you want to keep in mind if you are wanting to invest in this company. But overall, yes, I do see massive potential and massive upside within Drive Shack for the year 2021. So now we're here on CNN Business looking at the stock price forecast for Drive Shack. And it says the 3 analysts offering 12-month price forecast for Drive Shack have a median target of $4 with a high estimate of $5 and a low estimate of $3. The median estimate represents a 140.96% increase from the last price of $1.66. As for analyst recommendations, the current consensus among 3 polled investment analysts is to buy stock in Drive Shack. This rating has held steady since September when it was unchanged from a buy rating. Now for my thoughts on this stock and company for now and 2021. I believe they are slowly getting their financials back on track to before. I mean, with the sale of their golf course in California, it was a really great sale. Also with their upcoming venues they plan to open and their venues now, I believe they will achieve massive traffic flowing through them because of the vaccines. You know, all this vaccine talk is giving us all great hope to return back to our normal everyday lives. I do believe a vaccine will greatly be a catalyst for Drive Shack and many other entertainment venues because I can guarantee you that people are wanting to go out again. They want to be as they were before this happened, going out with friends, family, and just having a good time. As for the new venues, this is a huge thing, especially with the Puttery venues because they open themselves to a lot of markets, like we read earlier in their presentation. And I just strongly believe that Drive Shack is a penny stock to really watch for this year coming up, as there is massive upside and massive high growth potential. Now, what am I going to do with this stock? Well, first, I don't have any shares right now, but I'm going to be putting it in my watch list and potentially buying into it soon. You're going to want to put this one in your watch list. With that being said, I hope you all enjoyed this video. I hope you all enjoyed this coverage of this penny stock, and I hope to have given you some valuable information and much more. If you want more videos like this, please don't forget to hit that like button, subscribe, and turn on those post notifications for more videos just like this one. Also, comment down below what you think about Drive Shack, about this penny stock, and what you think could happen for the year 2021, and so on. With that being said, till next time you guys, peace.